This is the briefing for Friday, June 7th. This week I've been talking, in the weekday briefings I should say, I've been talking about the fact that there appears to be a floor in the market. And that's a result of a week ago Friday's trading. As you can see from this chart, this was Friday's trading, and you can see the important key reference area is 525 here. That was this high right through here, and you can see the rotational pattern the market's been in. Then we spent time rotating at and around this upper key reference area, and then on Friday of last week it appeared that the market was getting ready to sell off, and that we were going to see another rotation back down to potentially to test this 490 area. But in the last 30 minutes of trading, buying came in, and you can see the buying tail right there. And that buying came in. The next day, the market tried once again to trade below 525, and you can see the buying tail on the next day that drove price back up. Then the following day, following 4 trading days, we've seen the market just kind of lingering right at the upper extreme of this area of rotation. So it appears we got a small stair step up, but it does appear that strong buying came in last Friday. Now, I want to look at this on a shorter term chart, and I've covered some of this during the weekday briefings. This is Friday's trading. This is the last 30 minutes of trading during the day. Look at this volume that came in. Now, on the daily chart, there was huge volume that came in also. It's right there. And the same thing with the Qs. You can see that volume right through there. So if we go down into a shorter term time frame, you can see that this volume was pretty extreme in the last 30 minutes. This volume in the spiders was in excess of 21 million shares that traded in the last 30 minutes of trading that drove price back up through the 525 area. 525 is this area right through here. So then if we look at what happened with the Qs, you can see the same thing. The Qs volume in the last 30 minutes was 8.7 million shares traded that drove price back up above 450. And then of course the next day we had a retest of that, and then of course we've been off to the races ever since then. So basically what we have is what's potentially a floor. The market obviously, and I've been unable to find out who, what, or why the volume came in the way it did in that last 30 minutes of trading, but it certainly stopped what could have developed into a rotation, another rotation back down to test this 490 area. Now, we did have a selling tail today. During this whole move here, you can see that the internals are weak and weakening. You can see the divergence in volume. Volume is below what would be average low volume for the spiders. 52-week highs minus 52-week lows are declining. Breadth is diverging pretty dramatically. We made a new all-time high in today's trading, and we had negative 1,273 shares negative in the NYSE in terms of market breadth. So we really have an anomaly here. One is the fact that there's obviously a floor at 525 in the market. And if we were to break through 525 and it is not defended, in other words, whoever caused this huge buying volume that came in this day and this day, this was Friday and Monday of this week, Friday of last week and Monday of this week, if they don't defend that price, then that's going to lead to the potential for a pretty quick move back down to test 490, which is the next level of support. On the other hand, for this market, if this is going to be a new leg, another leg higher, then for the market to sustain that, we're going to have to see an increase or a strengthening in the market internals, and especially volume. This volume is just extremely, extremely low, and breadth will have to strengthen as well. Looking at the Qs, we've got the same situation. You can see the rotation around this upper 450 extreme, and then of course the breakout above this high, and then a little bit of a selling tail in today's trading as well. Look at volume in the Qs, just absolutely falling off, breadth falling off as well. And finally, the Russell. The Russell is diverging from the other two indices, so we have an intermarket divergence. Now, we never know how intermarket divergences are going to get rectified, but they always get rectified. So we need to figure out, or the market needs to give us enough information to figure out whether the Russell is showing us what the next potentially bigger, larger degree move is, or whether it's the spiders and the Qs. And you can see the Russell is testing now this 200 level, which is the lower extreme from this area of rotation, which would open up potential to trade down to this 190 level, which would be this low, completing another rotational pattern through here. Volume ticked up slightly in the Russell, but Russell breadth is declining as well. 1,168 shares are negative in today's trading. In terms of overbought and oversold, NYSE is approaching oversold. The NASDAQ is pretty much oversold, but not to an extreme, and we could see additional the potential for additional downside in Monday's trading. Looking at some of the other internals, this is the S&P 500, the percentage of stocks above the 50-day and the 200-day moving averages. You can see the divergence that's occurring here as price has gone higher. The percentage of stocks above their 50 and 200-day moving averages are declining as well. The same thing is happening in the NASDAQ. 50-day percentage of stocks above the 50-day moving average and the percentage of stocks above the 200-day moving average. Price moving higher, but the percentage of stocks that are trading above those averages is declining. And the same thing with the Russell. You can see the Russell move here, put in a new high right there, and then of course you can see the decline in the percentages above their 50 and 200-day moving averages. So basically, as we look forward to the coming week, it's going to be important to see what happens here. We have to be long. I have a small long position on, but I'm very tentative with it, mainly because of what's happening with the internals, especially see a higher high, a new all-time high, a higher high above yesterday's high, and on declining breadth. Now, certainly some of the higher weighted stocks will cause that to happen. But eventually, when you have more and more stocks that are trading lower, it will begin to weigh on the higher weighted stocks as well. So my suggestion and the way I'm going to trade in the coming week is that I'm going to be looking for long positions, but I'm looking for long positions with good trade management, good stop management, because if this thing turns, the floor is 525 in the spiders and 450 in the Qs. But if and when it turns, if those support levels are traded through, it could open up a fairly decent move to the downside. Have a great weekend. I'll pick this back up for subscribers on Monday.